Okay, this one. Okay, this one. I remember what we did for this question is we have done the disposal 4 steps. The disposal 4 steps we have done them, right? Okay, those highlighted in color. Okay, S1, S2, S3, S4. Okay, all these are done. And now we are going to charge depreciation. Okay, we are going to calculate depreciation for the NCA that you still own. NCA that you still own for this year. Okay, the one you sold it off, you don't have to charge depreciation anymore because it says none in the year of disposal, this line. Okay, none in the year of disposal. Okay, I think we have to read the question one more time. Okay, quickly, we read the question one more time quickly to recall what this question is about. Okay, to recall what this question is about. Okay. We are asked to prepare 3 accounts, right? Fixtures and fittings account, provision for depreciation account, then the disposal account. Disposal account is already done, okay? Nothing else to be done here, disposal account. And always remember, throughout the entire accounting subject, these are a very important component, okay? Must always pay attention to the date. Even if you happen to study accounting in the future, even if you don't study accounting, you may happen to touch accounting in the future. Because if you happen to touch any business kind of degree, then you will touch accounting for sure. Okay, so we focus on the date. The year end is 30th September 2020. Okay, let me write it down here. 12 months backwards, October 1st, 2019. Okay, we are doing the answers for this period. Okay, as I say, we have done the disposal 4 steps. Now we want to find the depreciation for this year. Okay, for this accounting period, what is the depreciation? Okay, so look at this paragraph. They say they use reducing balance method, 10% per annum. Full year's depreciation is charged in the year of purchase and none in the year of disposal. Okay. So when you bought a new NCA in the current year, you have to charge full depreciation. It doesn't matter how many months you own the NCA in the year you bought it, you have to charge full. Okay, that's what it says. Full year depreciation in the year of purchase. Okay, in the year in which you bought an NCA, you must charge full. Okay, this is the opposite of pro rata basis. Okay, the one you saw in my materials, pro rata, or you call it monthly basis. Okay, for pro rata and monthly basis, you have to times number of months you own it over 12. Okay, that's pro rata basis. Okay, that's what you have in part 7. But here is full year. Okay, you don't have to care for how many months you own it in the year you bought it. You charge the full depreciation. Don't have to times number of months over 12. Okay, this one have to understand what it means. Okay, and then let's see how to calculate. Saria preparing financial statements. For following information given. Okay, so this is beginning of the year. Fixtures and fittings at cost. Provision for division of fixtures and fittings. Okay, these are amounts at the beginning of the year. And then this portion, these 2 lines are about the disposal. Okay, these 2 lines are about the disposal. And then on this day, you bought a new fixtures paying by check. Okay, so let me interpret for you here. Okay, initially you have a lot of fixtures and fittings at the beginning of the year. Okay, and then you sold off certain fixtures. Okay, you sold off certain fixtures. Okay, you didn't sell off everything. Okay, you didn't sell off everything you have, but you sold off certain fixtures only. And then at the same time, you also bought a new fixture. Okay, so let me draw something here. initially you have a lot of fixtures and fitting, okay? And then on a certain day, you sold off maybe a part, okay? You sold off maybe a part. And we still own the rest, right? Okay, the remaining fixtures and fitting, you still have them. So we must calculate depreciation. The one that you newly bought, you must also calculate depreciation. Okay, so let me show you the formula. I show you the calculation. Reducing balance method, right? Okay. You use this formula. Cost minus provision for depreciation. Short form, yeah, provision for depreciation. Then you times what percentage? 10%. Okay. Look carefully, yeah. The calculation is going to look complex. And this could be one of the most complex calculation of depreciation you can ever see. Okay, so this is the formula. We are going to make use of it for calculation of depreciation using reducing balance method. We find the cost first. Okay, we find the cost first. Cost of the NCA, you have to charge depreciation for. You begin with 28600. Okay, begin with this amount. Then you remove the cost of the fixtures you sold. Remove the cost of the fixtures you sold, which is this one, 1,005. Okay, the one you sold off, you don't charge depreciation anymore, so you remove it. The one you bought current year, 3,005. Okay, so I'm going to use these three numbers to calculate the cost of the fixtures and fitting, which I have to charge depreciation for. So let me show you, and you follow me and write. Okay, 28600 is the fixtures and fittings you have at the beginning of the year. Okay, their cost. And then during the year, I sold off a portion, and this portion, the cost is 1,005. Okay, I remove it because I already sold it off. I don't need to charge depreciation for this, so I minus it. So already. Okay. And then the one that you bought in the current year, we have to charge depreciation. So you plus it. Okay, you bought it for how much? 3,005. Okay, 3,005. So this is for the cost. Okay, then I close bracket. Okay, I have calculated the cost. I use these three numbers. Minus provision for depreciation. Okay, so I'm going to start to calculate a provision for depreciation. The one in dark blue. Okay, now you begin with 6,185, the amount of accumulated depreciation you have at the beginning of the year. You begin with 6,185. Okay. Then you must also remove the portion that you have sold. Remove the portion of accumulated depreciation that you have sold off. Okay. Can everybody try to find out what this figure is? What this figure would be? Okay, I give you some time. Okay, I give you maybe 1 to 2 minutes. You try to find out. Let me repeat what I'm looking for here. Okay, this amount is the accumulated depreciation of the fixtures that you sold off. Okay, we have to minus it because you don't want to take that into account when you are calculating the depreciation anymore. Okay, so what is the amount? Okay, everybody go and find. It's from the answer. We use that amount in the disposal process. 1 minute lah. Okay, 1 minute. Okay, accumulated depreciation of the fixtures that you sold off. Okay, you observe the answers on the next page. Okay, you have that figure. Is the step 2, the amount that I use in step 2. Okay. Okay, I wait for Wen Hui, Xuanmin. So far, most of you got it correct. Okay, those who give me the answers. Okay. Okay, everybody has given a response. Okay, so I show you the accumulated depreciation of fixtures sold means for the fixtures that you sold off in the current year, how much depreciation you have accumulated for it. Okay, so most of you have answered correctly. It is the 285. It's the 285. Okay, it's the 285. And why isn't it 150? Where is 150? Oh, okay. I guess you had taken 1500 and times the 10%. No, that's not how we got the figure. You have to calculate it starting from this day, okay, and then all the way to the year you still charge depreciation for it. Let me show you again, yeah, how to get the 285. I show you the other day, but let me show again. Okay, the one that you sold off in the current year, okay, you have to charge how many years depreciation for it. Starting with this day. So have to look carefully at the dates, okay? Have to look at the dates very carefully. 2018, okay, charge it one time here. And then you have to charge for another year. October 1st, 2018, all the way until 30th September 2019. For these fixtures that you sold off, you have accumulated 2 years worth of depreciation. Okay, because you bought on this day. Ishin, are you talking about this one? This one? We are calculating depreciation for the current year. Depreciation for NCA that you still have for the current year. We are still doing the calculation. We are not done yet. So let's finish it off. This is 285. If current year, why we include the years that we sold off the NCA? No, I'm trying to find out for the fixtures that you sold off in the current year, how much depreciation you have accumulated upon it. You get the idea? Because I'm trying to find this figure. I'm trying to find this figure. The minus 285. Because I want to remove it. I want to remove it before I calculate the depreciation for the current year. Just like what I did to the cost. I remove it, I minus 1,005. And this one, I remove the associated depreciation also. Because I don't want to take that into account when I calculate the current year's depreciation. Okay, so 285 is the accumulated depreciation for the fixtures that you already sold off. Okay, then close bracket. Okay, so we have found the cost, we have found the provision for depreciation. You times 10%, then you can get the depreciation for the current year. Everybody calculate. Tell me what you get. I know it looks complex. Yes, this is one of the most complex calculation that you can ever see for depreciation. So if possible, please redo this question over and over again, then compare against the mark scheme. This is 28600, okay? There's a 0 here. Okay, good. Benjamin Wenhui, correct. The figure is correct. Yes, correct. It's in 2470. Okay, so 2470 is what? 2470 is the current year's depreciation for the NCA that you still own. Okay. You ask me why we don't take account of the value when we sold off the NCA. Which value? Take account of what value? For disposal, we have done the 4 steps and we found the profit or loss on disposal. Oh, because you sold it off already. It says none in the year of disposal. This line, it is this line. This line, none in the year of disposal means for the NCA that you sold off already, you don't have to charge depreciation for it anymore. That's why I remove it. I remove the 1005, remove the 285. That's the reason. Okay, none in the year of disposal. For the NCA that you have sold off in the current year, don't charge depreciation anymore for it. So I minus it. Okay, so 2470 is the amount I need for depreciation currently. Okay, so write the answer together, shall we? Let's write the answer together. When you do this question in the exam, your mind really need to be very clear. That means you cannot be sleepy. Really. Okay, you need to be staying awake and you must be able to link things easily in the exam. Okay, staying awake. So here write income statement. Current year's depreciation, right? Okay, 2470. Okay, one of you asked me, what if the question doesn't say none in the year of disposal? They will have something else for you. Instead of none in the year of disposal, maybe they would say something like this. The other version, let me tell you what it is. If they don't write none in the year of disposal, they will write full year depreciation is charged in the year of purchase, but is prorated in year of disposal. Prorated in year of disposal means in the year you sold it off, you still have to charge depreciation for the NCA that you sold off. You have to see how many months you own it in the year you sold it off. Okay, but this is a bit complex. I will show you what to do when we see other kind of question. For sure, we will see more depreciation question in the future. Okay, so this is the first version that you will see, none in the year of disposal. This is the most common ones. Most of the time, you will see this line. They must mention something for you as to what to do in the year of disposal one. Okay, they would not be having this question without this line, then leaving you to decide what to do in the year of disposal. They won't let you do so. Okay, they must have this line for you so that you know what to do. Okay, 2470. The year end is what? September 30th, 2020. Okay. Okay, what else to do? No more. We don't have anything else to do. Just balance these two accounts, then we are done. Okay, balance off these two accounts, then we see the mark scheme together. Easy, yeah. Okay, balancing is easy to do. Don't forget how to do it. You're asking me which year was this question from? You can see the bottom of the paper, of the page. Let me guide you on how to read this in case you do not know. Maybe some of you know, some of you do not know. This means 2020. This means 2020. This means October, November. October, November. And the 23 here, 23 here means, this means paper 2. This means paper 2, okay? And the 3 means variant 3. Variant 3, the version 3 paper. For every exam setting, there will be three versions of paper, okay? In order to avoid people, how we call it, cheating. Yeah, to avoid people cheating. If there's only one version of paper, in certain countries, they will have the exams earlier. In other countries, they will have the exams later. Not sure if you have watched a movie known as, hold on, yeah, there's a Thailand movie where it talks about cheating in the exam, but I've forgotten the name though. Okay, you can, now I remember. You can go search this up. It's a very interesting movie. Okay, because there's an exam that is held at different time on a day. Okay, because in certain countries they will have the exam earlier, and in certain countries they will have the exam later. Therefore, they have the chance of cheating by doing the communication. Yeah, correct. Wenhui, that's the movie. You went to Australia and then you took the exam, and then you tag somebody in Thailand, okay, who will take the exam later. Okay, it's a very interesting movie. Go have a look, really. Okay, so yeah, Crystal, this is the, you can just type this code into the Google search bar, then you can get the paper. Very easy one. Okay, just type it. Okay, you ask me where will the 2470 go? I show you. 2470 will go to where? Income statement. It will go to the income statement because that's the depreciation for the current year. You see, I'm doing this second step. Charge depreciation at the year end. Okay, charge depreciation at the year end. Okay, I credit the provision for depreciation account. Okay, which is this one. Okay, I'm doing this one. Yeah, income statement right on the credit side. Then it will immediately appear in the income statement. 2470 will appear here. 2470 will appear here. It's an expense. Okay, now let's balance it. Balance it, then we see the mark scheme. So there are many steps to do for this question. I'm aware. Therefore, you need to be super good in this topic. Otherwise, you would have confusion here and there. Okay, you have to master that part 7, then only you can do this question comfortably. Okay, the dates you write yourself, yeah. Okay, I write the balance CD and balance BD. And then next one. 8655. Not too sure if these are correct. The balancing, because the numbers look, it's not looking familiar to me. Okay. If you are still writing, I wait for you. Meanwhile, I go find the answers. Here. Okay, so let's check together. It's entirely correct. It's entirely correct. Look carefully, yeah. Okay, there is some alignment problem in the answer here. The 2470, there's alignment problem. Then there's also alignment problem for the 2020. 2020 should be on top of October 1st, 2020. Okay, when you're done with correction, let me know. If there's still anything you don't understand, you let me know, okay, before we move on to the next one. Okay, you begin. When you're done, let me know done. Okay, when Jean, Crystal, when Kelly are done, I answer you later, yeah, Asian. I wait for the rest. Okay. How does the 65 come about? That's the last step of disposal. That's the last step of disposal, 65. You see which side is greater, that's the fourth step of disposal. You see which side is greater, then you total up, then so in this case, the debit side is greater, so I put it here. I total up the debit side, then copy this to here. Take the 1500 minus the two figures here, then I can get the 65. That's how you get it, the last step in disposal. That's loss on disposal. Okay, so that's how you got the 65. How I tell it's a loss? Simple, look at the notes. You still remember how to calculate profit or loss on disposal? You see whether it's net book value greater or proceeds greater. So in that question, net book value should be greater than proceeds. Therefore, it's a loss on disposal. If you don't believe you do it on your own, you do the calculation on your own, you will get the same result. So the proceeds for this question is 1150. Net book value is 1500 minus 285. Okay, have to revise the topic really. Okay, otherwise you would forget easily. 1215. Net book value is 1215. Proceeds is 1150. Then you see which number is greater than the other, right? If proceeds greater, then profit on disposal. If net book value greater, loss on disposal. Therefore, in this case, NBV greater, right? Net book value is greater, is a loss on disposal. You take the bigger number minus the smaller number, then you get 65. 1215 minus 1150, 65. What do you mean equal to each other? I don't get it. What equals to what? Disposal account, you always do not have the balancing. Okay, you always do not have the balancing. You are trying to find this last number. Okay, whether the income statement will appear here or it will appear here. You are trying to find this figure. If it's on the left, then it's profit on disposal. Okay, so have to revise from time to time. Okay, now next page. Next page. Question A, state meaning of each of the following terms. So all these are easy. So expect them to have the possibility of coming out in the exam, okay? Because this is exam question, it's from the past exam paper. So can expect it to come out again. The answers you can get from the part 8, the part 8 materials. Okay, now we see the next question. Adil is a wholesaler. All his sales are made on credit terms. That means he always sell goods on credit. Adil always sell goods on credit. Okay. His financial year ends on 31st August. Okay. So question A is done. Now question B. Looks familiar. Okay, you did this before, but don't have to go have a look at the question you did with me. Okay, it is from the part 8. Okay, this is from the part 8. But let's discuss this again. We look at the B. Record this information in the accounts, in the following accounts in Adil's ledger. So we are Adil. We are Adil in this question. Then close the accounts by balancing or by making a transfer. So the difference between balancing and transferring process, balancing process and transferring process is from the part 6. Okay, part 6, first page. I told you very clearly the difference. You do balancing process when you are looking at SOFP items. When you do transferring process when you are doing the T accounts for income statement items. Okay, that's what I mentioned in the part 6. So for example, you have a motor vehicle account. Motor vehicle is something that appears in SOFP, so do balancing process. You have a bank loan account. It is a liability in the SOFP, so you have to do balancing process. Transferring process. Let's say you have a rent account. Rent is an item in the income statement, so you do transferring process. Insurance account is an item in the income statement, so you do transferring process. Okay, one of you asked me whether you are allowed to modify the definitions. Honestly, it's better to follow one-to-one. Okay, if you unless you know very well what are the keywords, then you can modify. Okay, if you know what are the keywords very well, then you can modify. I give you an example. Yeah. If you are not sure which are the keywords, then it's better to follow the entire sentence for definition. I show you. For example, this is the definition for irrecoverable debts. The keywords, you must have the word inability or unwillingness. You must have the word trade receivable, or you write debtors, or you write credit customer to settle any amount owed. It's also the keyword. Honestly, almost everything is keyword here. And yeah, I don't think it can be modified in any way. Okay. And yeah, better to follow, honestly, better to follow. Because you are afraid you could be modifying it into another version that the examiners don't understand, right? Okay, so better to follow the entire sentence. Okay, so continue here. Some entries have already been made in the account during the year. Okay, we know we are Adil. Okay, keep in mind we are Adil in this question. Okay, then look at the next page. You have two accounts here. Mahinda and Bad Debts account. So who is Mahinda to us? Mahinda is our customer or supplier. Okay, so you determine, you tell me in the chat box whether it's customer or supplier. Mahinda is our customer or supplier. Okay, I wait for everyone's response. You must be able to observe, okay? Must be able to observe when you are given a person's account, this person is our customer or supplier. Give you 1 minute. Let me repeat. Question is, Mahinda is our customer or supplier. Okay, I wait for one more answer. Good. Everyone is correct. Good. This is especially important in MCQ, multiple choice question. So there's a very popular question that give you a person's account. They give you a person's account like this. Then they will give you a few sentences. Okay, maybe A asks you, they give you a few statements. Okay, you have to find out which one is correct. If you know who is customer and who is supplier, then you will answer correctly. Okay, very soon we will see one. Don't worry. And yeah, our customer. How do we know? Look at the entries here. So this entry, how is this made? How does this come about? It is about debiting Mahinda credit sales, right? So why would you make this entry? Because you sold goods on credit to Mahinda. we focus on credit to Mahinda. Therefore, Mahinda is our customer. That's how you see. Okay, now continue to see the question. So you can see that Mahinda bought goods on credit from us via Adil. Yeah, via Adil. We sold goods on credit to Mahinda on this day, 600. Then on this day, they still returns 30. So this makes Mahinda owe less by $30. Mahinda still owes us how much? 600 minus 30. Mahinda still owes us 570. Mahinda still owes us 570. Okay, now read the question together. The challenge of this question is interpreting one line. This line. A check for 20 cents in a dollar. Okay. This is not something that you will only see in accounting. Okay. This is a normal description in English. This is normal English description. And once in a while, you may see in mathematics also. Okay, I remember I saw this before in mathematics last time when I was doing math. So have to understand what is meant by 20 cents in a dollar. I interpret for you again. On 31st August 2018, we received a check from Mahinda. Okay, a credit customer. Okay, in fact, here it has told you that Mahinda is our customer. Even without this line, you must know Mahinda is our customer, okay? By observing the T account. What should you do? Debit bank, credit Mahinda, right? Okay, we receive a check from Mahinda. Debit bank, credit Mahinda. Okay, next, we have to know what is the amount. How much is written on the check? How much is written on the check? 20 cents in a dollar mean, okay, write down. Okay, let's write down together. Meaning of it, for every dollar owed by Mahinda, she can only repay 20 cents to us. Let me enlarge it here. Okay, for every dollar owed by Mahinda, she can only repay 20 cents to us. That's the meaning. Yeah, correct. For every dollar Mahinda still owe to us, she can pay us back 20 cents only. So now we have to find out what is written on the check. Mahinda still owe to us how much? Just now we found it, right? Mahinda still owe to us 570. So you take 570 times 20 cents, then you will know how much Mahinda paid to us with the check. 114. Okay, so conclusion is we are going to use 114. 114 is the amount written on the check. The amount written on the check. Okay, so do the double entry, debit bank, credit Mahinda. Debit bank, credit Mahinda. Okay, therefore, you will write here then here write bank. Okay, this is crediting Mahinda. Okay, don't tell me this is crediting bank. You focus on the position of number and the name of the account. This is crediting Mahinda, not crediting bank. Yeah. Okay. The date is what? 2018. Don't have to write 2018 anymore. They have it on top. August 31st. Okay, then see what happened next. Next sentence. The balance of the account was irrecoverable. It's telling you that the remaining amount Mahinda owes to us, we can no longer collect from her. It becomes irrecoverable. Okay, so how much is the amount? Okay, everybody, you go find out. What does the balance here mean? Refer to what amount? Correct, Ishin. 456. Okay, 456. Because Mahinda still owe to us 456. So we are going to use this amount to record the irrecoverable debt. Okay, let me show you to let you recall how should you record irrecoverable debt. There are two steps involved. First step, you remove the trade receivable, you credit the customer's account, then debit irrecoverable debts account. Okay, this is first step. Okay, first step is about removing the customer's account. Okay, you credit the customer's account, debit irrecoverable debt. Second step, do transferring process. Do the irrecoverable debts account because it's an expense account. Irrecoverable debt is an expense account, therefore you have to do transferring process. Yeah, let's do these two steps together. Let's do these two steps together. 456, yeah, we are going to use 456. First step, we are going to credit Mahinda account, then debit the irrecoverable debts account. This is an old question, therefore they have the word bad here. Okay, but for your exams, you will see this term irrecoverable. Okay. Now let's do it. 456. 456. Yeah, synonym. They are synonym. Okay. What is the date? What is the date you recorded this? You can use the same date, 31st. So this is first step. So you look at Mahinda's account. There's no balance anymore. No balance means both debit and credit side have the same amount. Both debit and credit side have the same amount means there's no balance in the account anymore. Okay, because when you total up both sides, you get the same amount. This means there's no balance anymore. We have closed the Mahinda account. Okay, then we do transferring process to the bad debts account. You may have a question as to what this amount means. What does the 710 here doing? 710 here is about other customers irrecoverable debts. That means not only Mahinda is a customer who is not paying, there could be other customers also who have become irrecoverable. Okay, so they show it to you here, 710. We don't have to do anything to it. Just leave it there. That's not the balance BD. That's the amount they have recorded so far. Meaning, this could be for they are supposed to show it like this. They are supposed to show maybe this is for another customer, Abdul. Yeah, that's what it means. It's for other customers irrecoverable debt. Okay, is the irrecoverable debt for other customer. It's not the balance BD. Yeah, this is not balance BD. Okay, this cannot be balance BD because we never do balancing process to the bad debts account. Bad debts is an expense. We will always do transferring process. Okay, we will never do balancing to it. And then, so we have to do transferring process here. Draw the lines. The empty area is on the credit side. You write income statement here. Okay. Total up the debit side. Then you will get the amount you need. Missing figure is on the right. 1166, 1166, 1166. The date here is the year end. Year end is what? 30th August 2018. 31st, right? 31st. Okay, so finish. After you're done, let me know. We see the next question. Second step for doing irrecoverable debts. I don't think I have to show again. It's here. This is the second step. This is the second step. Second step is the transferring process. Here, yeah, you are right. Okay. And then one of you asked me, where does the 114 come from? 114 come from, you take 570. 570 come from where? That's the amount Mahinda still owe to us. 600 minus 30. 600 minus 30, you get 570. Then times 20 cents. Why I times 20 cents? Why I times 20 cents? Because for every dollar still owed by Mahinda to us, she can only pay 20 cents. So you take 20 cents times the amount she still owe to us, which is 570. Then you can get the 114. Kelly, okay. The amount still owed is 570, then times 20 cents. That's the amount written on the check. Okay, yeah. So that's it for this question. C1, C2, let's answer together. Theory question. One possible advantage of Adil of going ahead with this proposal. Proposal means suggestion, is written here. Stop selling on credit and to sell on cash terms only. That means Adil wants to have immediate payment from customer. Adil would like to have immediate payment from customers from now on. Advantage, there would not be any irrecoverable debts anymore because no customers will owe Adil anymore. Agree? So let's write. There will no longer be any irrecoverable debts. A good thing. But some customers can only buy on credit. Okay, because probably they don't have enough money. They always have to buy on credit. So if Adil stops selling on credit, Adil is going to lose some customers. Okay, let's write. These two lines are just the possible answers you may write. You may also write other answers. Let me give you some ideas. Other answers you may have. Yeah, you can write customers would stop buying from Adil. That's acceptable. That's valid. One advantage of stopping selling on credit. Oh, you can save the time of chasing money from customer, right? Imagine you have a lot of customers who owe you money. You have to take the time to see to go through all the customers to see they have owe you for how long. Then you have to call them up to remind them to make payment. All this takes time, right? So you can write another advantage if you want to. Until okay, that's also valid. Okay, this is also valid. I give you more answers here so that you have more options, okay, to let you have more ideas. When you are in the exam, you have more to recall, okay. If I give you only one answers here, and this is the only idea you have, then in the exam, if you cannot recall it, then you don't have any more options, right? So I give you more options here to let you have more ideas. Okay, one more disadvantage here. Going ahead with this proposal. Ideal sales could go down. Actually, it's the same as the first line. Just an elaboration. I don't think it's good. The other disadvantage of selling on cash terms only. Let me try to think here. Save papers. That sounds too simplistic. Don't write that. But I can help you to rephrase it. You see, when you don't have to print invoices, you still have to print another paper. When you sell goods on cash terms, means you collect payment immediately from customer. There's still one more document. Cash receipt. Okay, you still have to print cash receipt. If you sell goods on credit, you print invoice. Okay, so I don't think you can save papers. I don't think you can save papers. Okay, you still have to print the cash receipt. Okay, it's from the part 4, yeah, part 4. Okay, let me write this one more disadvantage here. Okay, relationship with customers could become worse possible. Because they would like to have all customers paying immediately from now on. Customers have to pay immediately from now on. So if they will feel like they are forced to pay immediately, therefore they will have worse relationship with Adil. Okay. Okay, we see another question. Next page. Question D. Suggest 2 ways in which Adil could reduce the risk of bad debts. I'm not sure if you can recall all these questions. All these questions you did before with me in the part 8. Okay, but let's do again. These are questions that are popular. Apart from stopping selling on credit, that means you cannot write this. You cannot write this, okay? If you write this, it's kind of like you are copying their answers. Okay, this is their idea. This is the idea given by examiner. So they don't want you to write this. They want you to write something else. Okay, so you cannot write this. How can you reduce irrecoverable debts? This question is easy. Offer cash discount to credit customers. Okay, so you are trying to attract them to pay earlier. Okay, attract your customers to pay earlier. You may also send statement of account. Remember statement of account? is something you learn in part 4. Send statement of account to okay. I have a few more answers given in the notes. Again, you can refer. It's in the part 8. There are many answers there. I show you. Yeah, here. Okay, you have many answers here. How to reduce irrecoverable debts. Okay, you can also write other answers if you want to. But I prefer to write these two because they look simpler. Okay, cash discount, send statement of account. Okay, I give you 10 more seconds. Then we'll do another one. Question E. This question you also did before. Okay, now we look at question E. Question E. Okay, question E. You are asked to do a provision for doubtful debts account. You must know how to do this. Okay, you need to know how to do this. It's a very popular question. I show you. Hold on, yeah. Let me give you a better example. Okay, this is something you have to know how to do. The provision for the doubtful debts account. Okay, provision for the doubtful debts account. And so revise a bit on this. Okay, revise a bit on this before we look at the question. You have to know, first and foremost, you have to know where's the plus and minus in this provision for the doubtful debts account. Okay, the plus is on the credit side, the minus is on the debit side. Okay, in this provision for the doubtful debts account, plus is on the credit side, minus is on the debit side. No explanation for this, but that's the fact. Okay, so you have to remember where's the plus and minus first. And the first year you started to become doubtful, the first year in which you started to become doubtful that certain customers cannot pay to you, okay, you're doubtful, you're suspicious. Okay, the first year in which you become suspicious, we call it the year of creating doubtful debt, the year of creating doubtful debt. And before that, you don't have such suspicion. Before the first year, you didn't have such suspicion. Therefore, the doubtful debt is initially 0. And in this first year, your doubtful debt is now 5,000. Just example, okay, 5,000. That means it's getting from 0 to 5,000. Okay, before that is 0, now it's 5,000. Is it an increase or drop? Increase, right? Therefore, for the first year, the double entries, you always credit provision for doubtful debts. Why? Why credit provision for doubtful debts? Because that's where the plus is. Okay, therefore you credit provision for doubtful debt 5,000. Okay, debit income statement means you show it as an expense in the income statement. Okay, and then you balance it. Okay, you balance the account. Then you get balance PD 5,000. Okay, then look at the second year. Second year is here. Okay, second year. So second year is for me to show the doubtful debt having increased. Doubtful debt has increased. So let's say doubtful debt for the second year is 5,005. Increased by how much? Increased by 500. Okay, last year 5,000, this year 5,500. Okay, it has increased by 500. Again, double entries will be the same as the first year because it's an increase. So credit provision for doubtful debt account again Then you debit income statement. The amount used is 500. The amount of increment. Therefore, you see here, credit PDD 500. Okay, and then you balance it again. Then we are in the third year. In the income statement, you show it as an expense, increase in PDD 500. Third year, I'm showing a decrease here. The full debt is 5250. It has dropped from 5500 to 5250. Drop by how much? 250, right? 5500 to 5250, drop by 250. Okay. Do you think the double entries will be the same as first and second year? No. When there's a drop, again, just recall where's the plus and minus in this account. Minus is on the debit side. Therefore, you debit PDD. Debit provision for that account, then credit income statement. Okay, with 250. Therefore, you show 250 here. Sorry, here. Okay, 250 here. Then you balance it, then you're done. Okay, so this is what you learn. This is what you learn. 250 will become the other income. Okay, other income in the income statement. 250. And certain questions may give you the provision for that debts account. They give you the provision for that debts account, a completed one, and they ask you to interpret. That means you have to explain. Let's say the question asks you to please explain this entry in the provision for the debt account. Yes, possible. You may face those questions. They may ask you to interpret what does this entry mean. Okay, you have to write in sentence, or what does this entry mean, and so on. Okay, you must know what each and every entry here mean. You notice all the amount next to the IS are either the increase or drop. Okay, let's say the first year you see 5,000, right? Because in the first year, it has increased by 5,000 from 0 to 5,000. That's the amount of increase. Second year you see is 500, right? Because from the first year until the second year, it has increased by 500. Agree? Increased by 500. And then the third amount next to the IS is 250. Can see this 250? Okay. That's the amount of drop. Okay, 250. It has dropped by 250. Okay, so remember all the amounts next to the income statement detail, they are either the increase or drop. Then balance PD amount, all the amounts next to the balance PD, they are the doubtful debt at the year end. First year doubtful debt is 5,000. Okay, as written here. Second year end doubtful debt is 5500, as written here. Third year end doubtful debt is 5250. Okay, as written here. Okay, so remember amount next to the IS, they are the increment or drop. Okay, amount next to all the balance PD, they are the doubtful debt at the year end. Okay, with this, now let's try the question. Again, this question you did before with me in the part 8, but let's discuss again. This is question which will score you 4 marks. Okay, 4 marks in total. Prepare provision for doubtful debts account for the year ended 31st August 2018. That's the beginning of the year. Sorry, year end. This is year end. So find the beginning of the year, 12 months backwards, September 1st, 2017. Okay. If you're not sure, you're not confident whether this date is correct or not, you can count yourself forward. Okay, you count the dates yourself forward to ensure that there are 12 months. Okay, so starting with September, then you count forward September, October, November. Okay, all the way until this month, ensure that there are 12 months. Balance and bring down the balance. Okay, reminding you to do balancing. So this is provision for that account. I call it the PDD account. Okay, easier to pronounce. So let's see how to do. Adil has maintained a provision for that for many years. Product following info. I see that this is the year end. Okay, this is the year end. And you agree this is the previous year end? Previous year end? Previous year's year end? Yes, right? Sometimes they use the previous year's year end to indicate beginning of the year. You can see this the same as 1st September 2017. Okay, because the answers that we are doing here, we follow this sentence. Okay, we follow this requirement sentence. The year end is this, and beginning of the year is 1st September 2017. Therefore, if they give you a date, which is the previous year's end, you can see this as the same as 1st September 2017. Okay, just the next day, right? Just the next day, right? Okay. So this is trade receivable at the beginning of the year. And then next line, trade receivable at the year end, 42,000. Okay, trade receivable at the beginning, trade receivable at the year end. Okay, they say after writing off Mahinda's account. Recall what is Mahinda account? They are talking about this account that we did earlier. We are doing the same question. Yeah, you notice or not? We are still doing the same question. Question 3. Okay, it's the same question. Yeah. So everything are linked. Everything are linked. Everything is linked together. So they say they have written off Mahinda's account. Why? Why is that important? Because of the formula. The formula used in calculating doubtful debt is in your part 8. You must first take trade receivable, then minus all the irrecoverable debts, then only you times the percentage. And the question just now told you they have written off Mahinda's account mean they have done this deduction. They have done this deduction for you. Okay, that means we can straight away times the percentage. Yeah, so this is what you have. Remember, that's the formula for calculating doubtful debt. Let's continue. On August 31st, 2018, what day is that? Year end. Okay, year end. Decided to reduce the rate of provision for doubtful debt from 3% to 2.5%. That means Adil's suspicion level has become lower. Okay, it has become lower for the current year. Previous year is 3%, current year is 2.5%. Are you given any doubtful debt amount in this question? No. So you have to find the doubtful debt for the previous year and the doubtful debt for the current year, because you want to find out whether there's been an increase or drop in doubtful debt. So you take 3% times 44200. Also take 2.5% times 42,000. Okay, let's do it. 3% times 44200. Then you will get the previous year's year-end doubtful debt. 1326. Then the current year's end doubtful debt, 42,000 times 2.5%. 1050. Okay, these two amounts are doubtful debts amount. Okay, one is for the previous year, another one is for the current year. Let me show you how to get the answers. You first record the initial doubtful debt here. Here, write balance BD. Don't get confused between this and the bad debts account. Okay, this is not a bad debt account. This is provision for doubtful debt account. We always balance it. Okay, we always do balancing to it. This is beginning of the year. From 1326 to 1050, is there a drop? Drop, right? Drop by 276. Drop by 276. When you write balance PD, the date is always the beginning of the year. The beginning of the year. Balance PD date is always the beginning of the year. Just now I told you that you can regard this as the first day of the year. Just it's the same, right? Just the next day, right? Because our answers, we are doing the answers for this period. Okay, and then I told you, you can regard this date as 1st September 2017. So you write the 30th. You write September 1st, 2017. That's the way they describe the question. You have to understand this means the same as this. Okay, because our answers, we are doing it for this period, September 1st, 2017 until 31st August 2018. The date next to the balance PD is always the first day of the year. Okay, it has dropped by 276, right? Later I show you the mark scheme. Okay, drop by 276. Double entries, you debit this account. Drop. Okay, because here is where you have the minus, here's where you have the plus. Here write income statement. Then the year end. Okay. Then you balance it. Then you are done. You should now be doing correction. Yeah. Okay. You should have attended the question. One, 1326, 1326. So you notice or not, once you have done balancing process, you get the amount 1050, which is the doubtful debt at the year end. Then here write balance CD. Here you have balance PD. First day of the next year. Like this. Okay, I show you the full answers. Let's see our answers are correct or wrong. The 276 is the decrease that you have determined at the year end. You determine that is yes, dropped by 276 at the year end. So that's why you write year end here. You can see it like this. Before you draw the lines, this is considered 1 year. After you have drawn the line, this is the following year. Okay. This is 1 year. Okay, this is 1 year. And then let's say there are lines here also. This is another year. This is another year. Then this is the following year. Okay, here's 1 year, here's 1 year, here's 1 year. No, you don't write September 1st year. You don't write September 1st year because you determine you determine the decrease at the year end. Okay, let me explain again why I write September. Okay, one of you asked me why I write September 1st year 2017. Okay, let's say there's a line here, okay? And then here is balance CD 1326. I'm doing the previous year's provision for that account. Okay. So here will be written August 31st, 2017. You always see this as the borderline for the end of the previous year. Of course, I cannot write August 31st here. The August 31st is the previous year. Because this is the following year. This is the current year. Is August 31st part of the current year? No. Therefore, I write September 1st year, first day of the current year. And everything before this borderline is the previous year. That's why I write 1st September here. You cannot write August 1st. You cannot write August 31st here. That's the previous year. Do you get it? Make sure you really understand. Let me show you again. I explain with a blank page. I don't think it's difficult to understand this, but let me explain again. This is a T account. Let's say here is the first year, and then whenever you have drawn the lines, it indicates the beginning of the following year. This is the second year. Okay. And let me draw the borderline for you. This is the borderline, which indicates the start of the second year, okay, and the end of the first year. And let's say our counting period is December 31st. Year end is December 31st. And then this is maybe 2020. And then this is beginning of the first year. For second year, January 1st, 2021. Year end of the second year, 2021, December 31st. So this is the second year, right? Should I show December 31st, 2020 here? Cannot. This is the first year. Therefore, I must show January 1st, 2021. Okay, I must show January 1st, 2021 here. How can I show the year end of the previous year? Year end of the previous year should be here. December 31st, 2020. Okay, so balance CD here, then balance BD here. Okay. Okay, and then you are saying the 44200 is on 31st August 2017. Okay, you try to think, yeah. 31st August 2017. And then the next day is what? Next day is September 1st, 2017, right? You try to think that on this day, 11 o'clock 59 p.m., 1 minute later, it will become 1st of September 2017, right? 0000 a.m. Don't you think that it's just split second here? Therefore, it's the same. Trade receivable on this day is the same as this. You get the idea? Just split second here, right? Therefore, the trade receivable at this point must be the same as this. It will not change in split second. Okay, so it's the same. And you remember about inventory? The closing inventory of a period is always equal to the closing inventory of the previous period. closing inventory of a period is always the opening inventory of the next period. Closing inventory of a period is always the same as the opening of the next period, because again, the reason is it's just split second. Okay. So yeah, this is something you have to be aware. Okay, good question though. Okay, now we continue. Next page. Question F. Explain how Adil is applying the accrual principle by maintaining the provision for that. Okay, this one, do it on your own. You can refer to the part 17. I know it's quite challenging. Quite challenging for you to remember all the lines needed to remember. So let me show you how you make use of the notes for the part 17. They're asking for accrual principle, right? Accrual principle is asking you in the context of provision for that. Therefore, your answer is here. The sales for which a business that are unlikely to be paid are regarded as an expense of the year in which those sales are made. The answers are always the same. The answers are always standardized. Okay, so make sure you remember this line. Okay, if they ask you what is meant by accrual principle in the context of bad debt or doubtful debt, it's the same answers always. Okay, nothing to explain here. You just have to remember. Okay, to get the 2 marks. G, 2 other accounting principles when maintaining a doubtful debts. Again, you can refer to that table. Okay, 2 other accounting principles linked to the doubtful debt. Now we do H and I. How this was recorded in Adil's books of account via Adil. Okay, let's see what is it about. On 30th September 2018, received a check for $250 from Amaya, whose account had been written off in 2017. In 2017, it was written off. And right, this is today. Okay, this is today. 20th September 2018 is today. You receive a check for 250. What you call this as? This is bad debt recovered. This is bad debt recovered. Okay, so have to recall what are the steps for bad debt recovered. It's a bit complex. There are 3 steps involved. Okay, here. Can you copy this down? This is the shortcut. Recently, I discovered this shortcut, which is easier. Yeah, all of you, you may bring out your notes, page 129. Page 129. Okay, these are the shortcut steps for recording bad debt recovered. Firstly, you record the money received. Okay, you debit cash or bank, then you credit bad debt recovered. Then second step, you do transferring process. That means you skip the part involving the customer account. You skip the part involving customer account. This shortcut is much faster and it's less burdensome. It's less burdensome. Okay, write down this one. This is part 8. Part 8, page number 129. Part 8, page number 129. Okay, once you're done copying down this one, you let me know. Okay, the ones you already have are these 3 steps, okay, for recording bad debt recovered. But this is the shortcut. Okay, shortcut is better, easier to remember. Both ways are acceptable, okay? The left-hand side one and the right-hand side one, both solutions are acceptable, but the one on the right is much faster. Bad debt recovered is what again? It's the reversal of irrecoverable debt. You read on your own, okay? You read on your own when you are free. Okay, you write down this one. A customer who has failed to pay last time, okay, you recorded them as irrecoverable debt, and out of a sudden, they came back to you and pay you. Okay, that's bad debt recovered. The reversal of irrecoverable debt. The reversal of irrecoverable debt. Okay, with this, we answer that question. How this was recorded in Adios books of account. This time I'm going to show you the shortcut one. The shortcut double entries. You debit cash your bank, then you credit bad debt recovered. So as the term implies, bad debt recovered means earlier is a bad debt. Now it has become bad debt recovered. That means it's something good. It's something good. Other income. It's an other income. So to write the answers, they say check, right? You receive it in the form of check. You write debit bank, then credit what? Credit bad debt recovered. And then you can score the 2 marks. 1 mark for this, 1 mark for this. Okay, let me repeat. Bad debt recovered is the reversal of irrecoverable debts. Don't have to write 250. Okay, don't have to write 250. Unless they have a column here, they write dollar, then only you write 250. Okay, for this question, don't have to. If it's a 4-mark question, don't have to write as well, because you don't look at whether they give you how many marks here. You have to see whether they have the dollar column or not. Then only you decide whether to write the dollar column, write the amount or not. Okay, but if they have the dollar column here, it won't be a 4-mark question. Do you think that they would give you 1 mark for just writing 250, and then another mark for writing one more time of 250? Of course, no. Okay, even if they have the dollars column here, it won't be a 4-mark question. It's still a 2-mark question. Okay, there's no easy lunch in this world. They won't give you 1 more mark for writing 250 and another mark for just writing 250, because it's something simple. Everybody knows how to do 250. Okay, it would still be a 2-mark question. Okay, yeah. Now question I. Unless there's another set of double entries for you to do, then it's a 4-mark question. Okay, state how this transaction would affect the profit for the year. It's an other income. It will increase the profit for the year. So you write increase by 250. Don't need complete sentences, okay? Don't need complete sentences here. Unless the question asks you to explain, then those are the questions where you need to write complete sentences. If they state, just state, okay? Don't have to write complete sentences. Okay, we move on. Okay, here you have something about control accounts. In fact, I would like to revise a bit on this before I do this with you. I think I will do it in the next lesson. Okay, next lesson, we do this question. This is the last question here. Okay, next lesson, we do this question together. You should attempt first, okay? You should attempt first once again. So after this question, we will move on to paper 1. After this paper, we will move on to, let me show you. We'll move on to the paper 1 for 11 to 15 test, part 11 to 15 test. Okay, so after that question, we will continue with MCQ. So make sure that you attend this as well. Okay, make sure you attend this paper as well, so that it would be more meaningful when I discuss it with you. Okay, and then after this paper 1, we move on to paper 2 again. Okay, all these papers I set them myself, and yeah, it took me some time. After that, we will move on to past exam papers. Okay, so that's it for today, everyone. I will see you next week at the same time. Bye, everyone.